If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. I'm a purple belt.
Yes, congratulations.
Thanks.
You have been married 10 years and you're a purple belt.
Yeah. It's been a crazy week. You knew about the 10-year anniversary bit.
Yeah.
You didn't know about the purple belt thing.
Yeah, no.
I didn't know about the purple belt thing. That's the way it works. You never know. Like
They judge you on a bunch of skills and activities, and then when you're ready, they tell you.
I was training on what's the day? Thursday. So I was training.
Yeah.
It's yesterday. I was training yesterday morning, and I was rolling with a guy, and then my professor came up to me and like while I wasn't looking, I'm like rolling. And like slapped me like 5 times on my back with the new belt.
Oh, nice, nice.
So that's like the old school way. Yeah, it's the old school way of getting your promotion. So it was pretty cool.
Congratulations.
Yeah, I mean, it's like it doesn't matter, but it does matter. It matters mostly because I wasn't going to go to Worlds this year if I didn't get promoted, because I didn't want to do 3 years in a row at blue belt. It just didn't feel real. But now I'm purple belt, so.
Whole new group of people to beat up.
I gotta go to Worlds, man. gotta train. Anyway, how was your week? But by the way, amazing episode with Paul.
Yeah, we missed you, but it was fun to have Paul on and talk to really good operator who's been running hospitals and actually in the trenches doing stuff. It was fun.
Dude, he did a great job. He was well prepped. He clearly listens to the show because he knew how to like step into the role and kind of banter back and forth.
Yeah.
It was awesome. So he's welcome back anytime, Paul. Anytime you want to come back, we loved having you, and you did a great job filling in. So thank you very much. What else is going on, man? Anything else before we jump into everything?
No, I'm pretty good. I mean, it's just the same stuff. A lot of portfolio companies making progress, a lot struggling. It's kind of a fun time. I think there's a lot of opportunity to bring new products to market, and the healthcare system needs help. So the buyers are willing to listen now, but we still got to deliver.
Yeah, there's definitely a lot more activity going on, and that's going to be a theme of today's show. So with that, let's dig in. All right, so quickly, we're just going to talk about the Fed, and I think as we keep talking about the economy, I think we're going to have to, I don't want to say shift away from the Fed, but talk about other macro things, because it feels to me that we're basically in the Goldilocks economy, right? I mean, all the economists are basically projecting that Q2 will, even though the consumer is weak, they are projecting that Q2 GDP will go up, so that will be an avoided recession.
Yeah.
They're saying there's 1.5 jobs for every person in America. So there's a lot of open jobs right now, apparently. And look, I mean, stock market's all-time highs. We're going to talk about that. It's like, do you need a rate cut with all this, right? So it's just sort of shifting.
I think no. I mean, if anything, I think the Fed has achieved a reasonably soft landing. If they would be honest and just say that 2% inflation is not their target, I think they would have everything lined up.
Yeah, it would be done.
Yeah, it'd be done.
We wouldn't be talking about this anymore.
The fact that they still pretend like they're going to get to 2% when I don't think that's very likely. And, well, they're not going to – I don't think they're going to cut the rest of the year. Maybe they'll do one cut. I think the odds are like 40% for 2 and 70-ish% for 1. For the end of the year. My guess is they don't do anything before the election. I've thought that for a long time. They're just not going to want to get in the middle of the election one way or the other. But I don't think that inflation's going to be down at 2. So I think we're in this new world where we have inflation at 3 to 4% somewhere, which probably is okay. And we have a pretty good economy if you own assets, if you own stocks or financial assets, real estate. And if not, it's a little bit harder.
So 2 data points that we don't have any links for, but just things that I kind of came across over the last week. One was on the Prof G Markets show, Ed Elson, who's the analyst for Scott Galloway, was talking about CPI, was talking about the shelter component, and sort of really dug into how the Department of Labor Statistics, Bureau of Labor Statistics, like actually generates that data, and it's survey data. And so we've already talked about how over the course of 12 months they smooth that shelter number because it's kind of too hard to track on a quarterly basis, much less monthly. Yeah. So they smooth it out, but even more so, he was like, it's a survey and it's sentiment-based survey. It's not based on like actual data. And he was comparing the rent index that was the component of shelter in the CPI with the Zillow index. And he was like, and the Zillow one is real data. Obviously, it's pulling from its marketplace. And he was like, the Zillow data is showing much, much lower rents than what CPI is projecting. And so what's interesting about that is inflation may actually be lower. Yeah. Than it seems, right? Like we've talked about in previous episodes how people's sentiment is not actually a good indicator for how the economy is actually doing. Yeah. Right. People think it's certainly like it's going bad across the whole country when in reality you look at it, it's like we actually have a great economy right now. So I thought that was one really, really interesting data point. The second was yesterday was Nashville's hospitality luncheon. The CVC throws a hospitality luncheon, and their keynote speaker was this guy Adam Sachs, who's the president of, I think the name of the firm is Travel Economics, and so it's like the leading travel economics consultancy in the space, and he actually gave us like a projection of what he thinks over the next 24 months Nashville is going to do. And his basic thing was this year is going to be kind of a flat year. Maybe a little bit up, but if you compare it to last year, like it's time for a little bit of a correction because we just kind of blew it out the park last year. But then next year we're going to go back to growth, and the year after that we're going to go back to growth, and that in certain categories, travel being a big one, people are continuing to prioritize for travel. Now it is hitting the lower income population harder. But the majority of travel is really done by the higher earning bands. And so, everyone is a little bit skittish at the moment, but they're all gearing up for a lot of travel over the course of the summer and planning on big trips for 2025.
Yeah, I think consumer leisure travel is pretty strong.
Yeah. But
the trade show events is also strong. It's the business travel that's still like we're waiting around to see if people are going to start traveling or not.
Correct. And the business travel has actually rebounded quite a bit, but it's non-committal, right? Like based on how things are going in the market or things are going in the company, they will cancel a trip like without a problem. They have no problem canceling a trip.
There's a good alternative now. Just jump on Zoom. And everyone's used to that now.
Absolutely.
So it's a way to save money.
Locking down travel, for your employees. There's a lot of that going on. Yeah. So I think you're right about that. But anyway, just sort of making the point that it feels like all this stuff is kind of priced in at this point. And the one part of the economy that is actually struggling in terms of real wages, real earnings, is the working class. Yeah. That's where it is legitimately getting harder. And it's not just rent, right? It's the cost of kind of everything is just up. And your wages are not.
And groceries and everything. Yeah.
Yeah. And your wages are not up. And you don't feel like you have a lot of latitude to move around from job to job right now. We're not kind of in that window where people were very non-committal to their jobs. People are playing it a little bit more safe. So anyway.
I think the reason that we cover this is twofold. Inflation is really impactful to health systems and payers.
Labor.
And labor costs is also part of that. Their reimbursement is set by health system reimbursement is set by inflation largely.
Largely, yep.
And so a lot of volatility, inflation going way up to 6, 7, 8%
within 1 year,
and then way down is hard for the health system to react to because we only adjust reimbursement rates roughly once a year.
Right.
And then, we care a lot about the stock market and exits in our portfolio and when is it time to sell assets and not. But I think you're right. The next several quarters probably I think we're going to have pretty good GDP growth and inflation that is higher than the Fed really wants, but they're not going to, I don't think they're going to do that much because, honestly, it's not the end of the world. With the amount of debt we have, it's not the end of the world to have hot inflation for a little while. It'll make the debt a little easier for the federal government to pay.
Yeah. Just getting into the next two stories, right? So first, stock market, all-time highs.
Yeah.
And
literally record all-time highs.
Yeah. Did Dow hit 50?
Yeah.
It hit 50,000. Yeah. So that's what I mean when I say, what do we need cuts for? Wall Street is fine, right?
Yes.
Wall Street is fine. There's no need for cuts for Wall Street. And, we're going to get into VC deals later, but there's a lot of deals going around. And there was a lot of capital that sat on the sidelines. It's now starting to move. So for our industry, we're probably fine.
Yeah.
We're fine. We can just sort of adjust to the new norm and get back after it. Target reports another sales drop. So the consumer is weak.
Mm-hmm. Walmart was last week. Target's this week. Both are top. Walmart did better because they have lower price points. But both of them were talking about the struggling consumer, and they're seeing the difficulties in that kind of bottom part of the K. Working class folks are not able to buy the same way.
Yeah. Credit card balances are up.
Yeah.
90-day delinquencies are at, I think, highs for the last 10 years.
Yeah.
So that's all going to come to roost. And, no more stimmy checks, et cetera, et cetera. So, the consumer is weak, and that's probably for the foreseeable future. Mm-hmm. And on the other end of that K, you've got Nvidia, right? So,
right.
So Nvidia smashes their quarterly targets, raises their outlook. And when we talk about Nvidia, we need to just talk about what they represent, right? Why is this stock just completely blowing it out? It's because this is a stock that businesses are going to be able to leverage to lower their OpEx and grow their bottom line. That's just shooting all the way to the P&L of what AI really does. And certainly some of that is going to be efficiency, but a lot of it's going to be lower labor costs.
Yeah, there's no question. And they are the company to focus on to see what's the attention on AI, or is there really pull through? Is it slowing down? And the answer is no. It's still to the moon. 260% growth in a year, and on big numbers. I think it was $26 billion for the quarter. Yeah,
for the quarter.
And then they did a 10-for-1 split because what the heck, you might as well when your stock grows from 100 to 1,000 in a year. Yeah, we should do a 10-to-1 split.
It's amazing. And look, Nvidia is the far and away leader in AI chip development, mm-hmm. and we know Microsoft is working on this.
Yeah,
Alphabet is working on this, right? They're not going to be in this alone, but they're just so far ahead that
they have in the mid 80s market share, 85%, 84% market share. So even if they are going to get competitors, everyone's trying to build a chip, but they're pretty good and
they're focused.
And right.
They're completely focused on this one mm-hmm. thing, whereas all these other companies, they're service providers, they have phones, you know what I mean? That's the story of the market right now. Mm-hmm. Market's all-time highs, AI dominating everything, which is just going to be, I think, more problematic for the consumer on the earnings side, but also should hopefully lower cost and create more efficiencies and higher quality services for them on the consumer side. So good if you are tracking relatively well in mm-hmm. terms of stability of your career and your income. And if you're kind of on that edge where your job is a target for AI, mm-hmm. probably pretty problematic. Yeah.
And I think that's going to be it's a weekly show. That's going to be the next 6 to 12 months. And so I agree. We're going to have sort of just an ongoing high growth in the economy and somewhat high prices.
Moving on to VC deals, a company called Boulder Care. Boulder not for Boulder, Colorado, but Boulder for the metaphor of a boulder, meaning the weight of what it feels like when you are dealing with addiction. They raised $35 million for a virtual addiction treatment business.
Yeah, and they're in 6 states right now, and they raised this money to grow to 10, I think. So great. It's a huge problem, and great that they're expanding.
Yeah, we're going to talk a little bit later on about a special interest story about Baltimore, and also some really not so great things we learned
Yeah.
about other cities in America. But the epidemic of opioids continues, and it's ravaging communities, and we don't have nearly enough firepower going at this problem. So this is a great round. We're really excited for this company. Obviously, Eleanor Health and our friend Nzinga, I think they're continuing to grow, and we're going to need more.
Yeah, we need an all the above
need more
kind of
revolutionaries
approach.
working on this. Yeah, because right now we're losing the war for sure. All right, Fierce Healthcare did our job for us.
Yeah.
So Heather Landy, thank you very much, the author of this article. They did a full-on sort of fundraising tracker. I think it's probably covering the last 30 days, but a lot of these deals I remember seeing over the course of the last 2 weeks. So I think it might even be more recent than that. 18 different deals that they cover in this one article, and sort of high-level themes that you see in here. AI, clearly the far and away the biggest theme, capturing large checks. We can start with the first deal here. Lore Health pockets $80 million for an app that combats stress and loneliness, which I think when we talked about it, seemed a little bit like on the frothy side of things, especially when they make their money from sort of healthcare savings, from a stress and loneliness perspective. Obviously, we talked 2 weeks ago about all of the apps that are out there to be companions. ChatGPT released 4.0.
Yeah.
And now we've got the Her voice. I mean, minus the Scarlett Johansson issue.
Right.
But we've got audio companions that are right now distributed via ChatGPT. So I wonder how much a health-specific AI company is going to be able to do in this space, and then furthermore, how they're going to be able to track the healthcare savings. But, look, AI is the rave, and there's going to be a lot of big checks written, chasing after the opportunity.
Yeah, I think I agree completely. The idea of value-based care, I think, is really attractive. But the only successes I've seen have a very specific focus, usually on a disease state or a geographical type of population. And trying to do loneliness, which is a horizontal thing across pretty much every disease state, with an AI tool that looks pretty similar to the one I have for $20, I don't know that I would have invested $80 million. But there are a lot of lonely people. So whether they can show that they're driving savings due to their app, it's a good thing to give people a tool to be less lonely. I just don't know if the business model, I have concerns about the business model. But
yeah. I mean, there's viability in the problem they're going after.
Yeah.
Right. Meaning, stress and loneliness and how that impacts your health. And we're going to talk about that later on as well. But it's just, how ready is the market for that as a business solution, especially in terms of being able to measurably demonstrate healthcare savings. That's an entirely different bar. A couple of the other big themes here, a lot around revenue cycle management, a lot. I think there was 3 different deals in this list that sort of track that. Smarter DX raising $50 million is one of them. And they've got Bessemer, Flare, Floodgate. So, sort of usual suspects circling around that one. Radiology, sort of, we talk all the time about radiologists being sort of ground zero for clinical, decision support. And here's another company, Rad AI, that raised $50 million, scaling Gen AI for RadTechs. So, look.
I had a good lunch with a friend of ours that's a radiologist turned entrepreneur. I'm trying to get him to come on as a guest. So radiology is a really interesting space. Lots of complexity in the regulatory environment, U.S. and global. And so I think hopefully we'll have a guest show talking about radiology. But the summary, I think, in these 18 deals is a lot of money going into venture stuff. A lot of B, C, somewhat later than we normally do, and pretty big rounds. Yeah. And so I think it seems pretty healthy. It might even be on the edge of getting hot. Or getting, maybe not overheated, but it's starting to be a lot of money coming in.
Yeah. It's certainly exciting to see this many deals being listed in one article, right? That are from no more than 30 days.
Right.
I can't remember the last time that I saw an article like this. So that is really exciting. Seeing so many of them targeting AI solutions, it's like I'm all for the ones that are focused on revenue cycle management because there's unending, opportunity there. The rad tech, I think that's going to be a very crowded and competitive space, but also really viable, as well. And then I think there's some of these that are more on the fringes, like this Lore Health business that not to say that it won't work, but it's certainly, to me, it's riskier. It's a riskier bet to sort of go out on a limb, and it would have been risky without AI.
Yeah,
you know what I mean. So you start to add in AI, and now it feels a little bit speculative. But anyway, look, it's great to see so many deals getting done. Moving on to policy. So HHS, they are sort of partnering with the White House on ARPA-H. ARPA-H is sort of a play on the old DARPA model, and really focused on how we can do moonshots in health. The H stands for health. But these are advanced research projects that are being funded via effectively grants. They're being written by this carve-out organization, ARPA-H. And these are kind of, special grants that are given for real problems that we see in the healthcare industry. And, they were focused on things around aging. They were focused on things around pregnancies. But what has emerged as a massive issue in healthcare over the course of the last year? Cybersecurity. Yeah. Right. You can't go a month without a major company having a cybersecurity issue.
And they're not like a one-off thing. I mean, they're down for a long time.
Yeah. A long time. Yeah. And it's really, really scary how that impacts, the ability for these systems to provide care for their communities. Yes. So ARPA-H is offering more than $50 million for hospital cybersecurity platform pitches. So, look, I like the responsiveness of it. I love I like the signal. This is a good way to signal that the government understands we need targeted innovation to start to focus on this problem. Obviously, $50 million is not going to be sufficient to safeguard our sort of health system infrastructure in America. But at least putting a bounty out there and getting, ideas to come to the table, that is a good thing. So don't want to, knock them for the size of the sort of pitch prize bounty, but more sort of celebrate the fact that, okay, we're getting somewhere now.
Yeah, I agree. It's valuable symbolism. I don't know how much I trust that the government investing $50 million in pitches that they see is going to really combat significant black hat criminals who probably get $50 million per ransom that they're doing. But I don't know what else the government should do. So they're taking action, and I think we should celebrate that.
The one thing that I am looking forward to with this is I don't feel, and maybe you feel differently, I don't feel that over the course of all these different stories, I have a good sense of what the origin of the cybersecurity issues are. And so I'm hopeful that these pitches, they should be public. This is a government sort of program. I'm hopeful that these pitches provide some insight into what the vectors of threat are. I think we make assumptions that it's people who are, giving up access to sensitive data or to parts of the system that are administrative that they shouldn't. But I don't know that. Like, how much of it is actually social engineering versus APIs versus bad networks versus the bottom line is I just really don't know.
I don't think anyone knows.
Yeah. So maybe this pitch, program will actually provide some visibility to the general public around, hey, how are these things getting so lit on fire all the time?
Yeah, and I think that's right. It's also true that I think there's a lot of cyber attacks that are not announced.
Yeah,
I was at a dinner, I don't know, someday after the show. So it was like Friday night or Saturday. And there were 4 of us at the dinner. And we were talking about Ascension, which we'll talk about in a minute. And I was the only guy that hadn't been a victim. So the other guys that I'll tell you their names when we're off air. They lead healthcare companies here in Nashville, and they also had been attacked, but they had been, sort of paid the ransom and made it go away quietly. And both of their situations were a partner partner was compromised, didn't know it, and so it kind of went in, tunneled in through their partner relationship.
Got it.
And I think this is going on all over the place, and it's so quiet that then you don't really know, and so you're not aware the partner has been compromised, and so it's a hard thing to get your hands around, really. Yep. And I don't blame people for being quiet about it. I think it's just
my gosh. I mean, look, there's nothing good about the PR that comes from these things, and I think in some cases it's so big that you can't get away from it. But yeah, no, I don't blame them at all. I don't blame them at all. All right, so this is a story about Nebraska suing TikTok for allegedly harming minors. I mean, TikTok is having a lot of weird stuff happen right now. They're countersuing the government.
Yeah. Well, a bunch of TikTok influencers are, right? I think that's what I heard. It's like 10 TikTok influencers hand-selected and to represent different geographies, different types of businesses.
Oh, I thought TikTok itself was actually countersuing the government.
Maybe, but I don't think there's that many hard feelings about TikTok. But the actual U.S. citizens that rely on this, they also are suing the government for taking away their business, taking away their First Amendment rights.
Yeah, so it's interesting now. Most of what we've heard coming out of AG offices around the country is that Meta is the big culprit when it comes to mental health issues. TikTok, it's not really that social of an app. It's just kind of like a never-ending stream of content, and it's much more something that you sit back and you consume than something you actually engage with.
Yeah, but their algorithm is really good at pulling you into things and continuing.
It's ridiculously addictive. Everyone knows that. I mean, that's why you either keep it off your phone or you just never get started with it, because no one has proven to be strong enough to I mean, our good friend Nick Holland was talking about, God, I gotta get this thing off my phone.
Yeah, I deleted it off my phone for the same reason.
Yeah, I deleted it because I don't like the China thing. But I mean, so it seems like someone is now, the Nebraska Attorney General is taking that argument around the addictive nature of it and saying, hey, that is creating compulsive behavior like a gambling machine. And so I mean, I think, look,
there's no question it's doing that.
There's no question that. There's no question that. I think though that most of what I have heard from people who are fans of TikTok, who have it on their phone, love it, use it every day, is that the content is generally speaking more positive than what they get on Meta. More informative, more sort of pure entertainment, sort of less nefarious. Meta seems to kind of go more down the dark path when it comes to the content that they're serving up. So it'll be interesting to see how this actually plays out. This feels like just another knock on TikTok.
Well, and I think there's a to me at least, there's a difference between over 18 and under 18. Like if you're over 18,
that's right,
and you can buy a pack of cigarettes and a quart of Jack Daniels, why can you not use TikTok? But 13, 14, 15, 16, I don't know. I think there maybe should be guidelines, but that's up to the courses. I don't know if TikTok will still be around by then.
I mean, let me just ask you maybe a broader question though, is do you think we're going to get to a place where we can effectively age gate these social media platforms in America? I mean, it seems like the obvious solution, but how can you actually do that?
Well, there's a difference between policing the law and creating the law in my mind. So the fact that, let's just use drinking because that's pretty established.
Yeah.
The fact that there is underage drinking in high schools across America does not, to me, suggest that we should make it legal.
Right.
Right. And I think it does give, at least me as a parent, it gives you more credibility, more ability to say to I have sons, like you can't drink. It's not allowed.
Right.
Or if you can drink, have one drink with me, but you're not allowed to drink. And we haven't said that with social media. Now, if a parent decides to buy their child a case of beer and let them have a party with their friends in the basement or whatever, that's really on the parent. But us as a society, we have said it's not allowed. And if you then buy it for your son or daughter, I don't know. I think that's a different thing. So yes, it is going to be very difficult to police it and like enforce it. But I think there should be some kind of age. I think these things are as dangerous as other very addictive stuff.
Yeah, but there's, you're not going to force people to present their identification to create an account. Like, that's not going to happen.
Yeah.
You're not going to hold parents, responsible for their children creating an account. Parents can't necessarily know.
Mm-hmm.
And no one seems to be willing to fine these companies in a way that actually would be a deterrent, right? The algebra of deterrence is just not there. They'll eat the fines for, a light snack and keep on making money.
Yeah.
You know what I mean? So I guess that's why I kind of look at this, and I feel like all of these AG suits and, all the mental health stuff they're claiming, it's like, okay, but to what end and what kind of remediation are we as, citizens going to get from all these different efforts? Like, how performative is this versus actually, moving towards making our children safer? That part is just not clear to me,
Yeah, I think it is. I think it is harming our kids. And to me, the fact that it is allowed and legal and anyone, I think it's like 13 or something,
mm-hmm.
that they do make you say that you are 13, and if you're not, I'm sure people just lie.
Yeah, they just lie.
But that at least is a regulation. Now there's an enforcement thing.
Right.
But I don't know. I think it's fairly obvious that, like they're saying in this article, it's very similar to other things that are very addictive and adults enjoy. And I just think adults are a different category.
All right. So shifting to a topic we would not normally talk about, but I think you and I want to be on record because in the future, if what we talk about here pans out, we want to have talked about it so we can refer back to it. There is a bill that was recently approved by the House of Representatives called FIT 21, and it's about financial innovation. It really is centered around crypto.
Yes.
And digital assets, digital dollars, et cetera. It was passed by the House. So that's meaningful because what has been the party line, crypto has been a very partisan issue, and I think you and I never could figure out why.
Yeah.
But it has been a very big partisan issue really for the entirety of the Biden administration's time in office, and even a little bit going back to Obama's time in office. Although crypto was nowhere near as big when Obama was in office, but
for whatever reason, the Democrats have until this week not been in favor of crypto broadly.
Right. And probably the big thing that turned everything initially was that the Bitcoin ETF was finally approved.
Yes.
And that got BlackRock and a bunch of other very, very legitimate financial companies engaged in the crypto space in a very, very real way. BlackRock kind of very quickly followed up and did their own little independent fund that they ran on Ethereum, not a private instance of Ethereum, but the public blockchain Ethereum. And I think what happened is we're in the election year. Every vote matters, especially in swing states. And somebody finally got the message to the White House that that the issue of crypto is actually a swing voter issue, and you actually are going to lose voters because you're letting Elizabeth Warren and Maxine Waters, kind of drive the narrative here, and you're letting this Gary Gensler guy in the SEC, demonize something that people feel should be a fundamental American right, which is the right to, buy and sell assets as they please, and also custody those assets as they please, and not feel like they're doing criminal activities. And so we have gone this week from Bitcoin being the only allowable cryptocurrency to just today, the SEC approved
like 2 hours ago
the Ethereum ETF. And so we are now in a world where the two biggest cryptocurrency assets are now approved for ETFs.
You can own in your 401k.
Yes. And then we also have in parallel this Fit 21 bill that has passed the House, and almost certainly now, based on what we just saw the SEC do, which is a complete about face, that's likely going to pass the Senate as well, which is Democrat controlled. And so
you mentioned Maxine Waters. She's saying she's in favor of it.
She's politically savvy.
Yeah,
I mean, you know, what did she turn? Because all of a sudden she had a change of heart in crypto? No, she realizes this is a stupid thing to lose votes over.
The Dems are I mean, there's people in Nashville, there's people all over the place that vote Democratic, but their base is East Coast, West Coast.
Yeah.
The West Coast has been all in favor of crypto for a long time. But the East Coast, led by BlackRock and Fidelity,
for a long time,
was against it.
Yeah, for a long time.
For a long time. And they all turned because they can make money on it now.
That's right.
And I think that's the thing. It's like now all their donors, and it's a swing vote, and why are we fighting this again? Like everyone wants it. So, so Fit 21 establishes the CFTC as the regulating body, which is interesting and probably where it should be. But then the SEC approved the ETH ETF today, so they also seem to be turning positive, and I think it's good. I mean, I don't see any downside to it.
Okay, so here's why this is important. This is important because at some point in we'll just call it distant future, what has happened this week, I think, is going to make cryptocurrency a legitimate innovation platform for commerce, period.
Yes.
Full stop. For all things commerce. And obviously, healthcare payments is a big piece of commerce. I also believe we're shifting more towards, and this is more of a demographic shift. We're looking at this happening over the course of generations, but you know, we're kind of in the middle of that shift right now. Yeah. The boomers are on their way out. The millennials are on their way sort of into prominence. We're moving into this sort of demographic-based shift where the patient, for reasons of, I have my record in my hand, AI is going to be super powerful, the physician workforce is getting, pummeled and beat up, I want to be able to have personalized medicine based on my genetics. The patient is going to have more power in healthcare in the near future. This is coming. And when this happens, all sorts of new models for payment are going to come into play as well. And not so much paying in Bitcoin or paying in ETH, but I do think paying in like USDC, where there's no middle person and things can be settled immediately, that's going to be a new option that we've never had before. And to me, it never was viable until this week. But now that we have a regulatory sort of glide path for it, I think we're going to start seeing, as VCs, we're going to start seeing deals that are talking legitimately about how to integrate cryptocurrency into the healthcare payment flow.
Yeah, I mean, I start with healthcare is $4 trillion a year, and something like a quarter of that, $1 trillion, which is, a lot of money, is spent in the overhead, payment processing, revenue cycle management, adjudication. It's $1 trillion a year. And it does not need to cost that much. And by the way, all of those systems are being hacked. And ARPA-H should do much better to get on ETH and do some innovation, because you would take away the honeypot of data. But I think it is going to be sometime in the future, but this week is when the U.S. federal government shifted and is now trying to create regulatory apparatus to allow crypto to have a path. And all the crypto, we know a bunch of crypto innovators, they're not trying to do something nefarious. They're trying to understand, what am I allowed to do? What regulatory body do I submit information to? And America should be the innovative place for AI and for all the Web3 crypto stuff. And we will be, as long now the federal government has got out of the way.
Look, here's the deal. This all goes through, there's going to be a massive influx of capital and innovators
Yes.
who would prefer to be in America.
Yeah.
They don't want to be in Europe.
abroad in other domains because they get arrested here.
Yeah.
I mean, a few entrepreneurs have been arrested for things like the turbo cash and other stuff.
Exactly. So anyway, this is one of those things that, like, I know the average listener is just like, I don't want to hear about that.
Yeah.
But this is a watershed moment, because if you haven't been tracking it, you wouldn't know what a 180 this was. I mean, like, this was kind of like a, over my dead body kind of thing for Gary
Biden
Gensler.
said a month ago he would veto the bill.
Yeah.
And then, he started getting all kinds of campaign advice, and Trump was tweeting, or he doesn't tweet anymore, on whatever platform he's on, just taking advantage. I don't think Trump cares one way or the other, but he saw an opening. So the Dems, this is not a partisan issue.
The Dems made it one.
They made it one stupidly. It's a free market innovation thing. We have the best capital markets in the world because we have the rule of law, but we also allow innovation. So BlackRock is leading it, and they're going to make a bunch of money, but other people will get to play too.
All right, shifting to payers. Optum Rx puts emphasis on predictability with a new pricing model. I mean, I think the long and short here is, Optum will continue to evolve, continue to innovate, has the capabilities to do that, has the scale to deploy it in a way that most organizations don't. And B, Mark Cuban has made his mark.
Yeah.
If it were not for cost plus, I don't know that we would be seeing the changes that we're seeing in the PBM world the way we're seeing them. It's pretty impressive what he's been able to get done in terms of forcing innovation.
Yeah, it's incredible to see an innovator go to market and show how the healthcare drug pricing system could be better and easier to understand and fairer and strong enough that he's not going to go away.
Right.
And then Optum is huge, and they're fast following him, which is great. And now everyone already had to follow, and they're going to have to follow again. Yeah,
but this is a win for us as Americans, right?
Yes.
This is a win. We are all going to have a better prescription purchasing experience now. And I think, I don't want to rewrite history. Mark Cuban deserves some real credit for putting capital and his personal name out there to drive this change in the market. This is great.
Yeah. Do you know who might be able to use crypto to help? Mark Cuban could.
Mark Cuban, I think, has a lot more tricks up his sleeve. So looking forward to see what he brings to market. Centivo. So this is a VC-backed sort of new payer model focused on the employer segment. 2 weeks ago, we talked about sort of the return of all the VC-backed payers. After years of languishing, finally they're starting to turn the financials around. And Centivo actually is acquiring a virtual first medical provider called Eden Health. Now, the virtual first model, we're seeing a lot of weird, sort of churn in that space. We're seeing companies kind of go under. We saw Optum do some layoffs related to their virtual, care business. So I think this is going to be an interesting one to watch, but Centivo has purchased Eden Health with the intent to sort of roll it out across their entire base. And I think one of the reasons why this is interesting is because Morgan Health, which is JP Morgan's sort of healthcare initiative, largely leveraging their influence as a large employer, but also writing checks, wrote, I think, a $40 million check into Centivo. So that's a good signal.
Yeah, the virtual first primary care business model is challenging, but I think it works really well as part of a payer, especially when focused on employers, because the employees are busy and they need to be seen quickly. And so I think it's a great acquisition, and I think it's really compelling as part of Centivo. But I agree, the overall advanced primary care and virtual telehealth stuff, it's just being integrated into other care systems. I don't know that it's that great as a standalone. You need sort of a niche, or you need several partners if you're by yourself.
Yeah, as Paul said last week on the show, he was like, it's it's turned into a commodity, right? So maybe it's table stake. Maybe you don't need to have as many employees as you had previously for it. But Centivo obviously moving down the payvider model here as well. So more and more, it looks like payvider model is the model for payers, right? Moving into the health systems side of things, nowhere else that you could start except for Ascension.
Mm-hmm.
So Ascension has a cybersecurity event update page on their website, and we'll put this in the show notes. It's actually really great because they lay out sort of what's happening by region, and then a pretty good FAQ for.
They did a really good job about disclosure and being transparent about what's going on.
I agree. Also, not only did they do a good job on disclosure, credit to the clinicians and the administrators in these facilities. They've done a great job of keeping the business going under what is, really very difficult circumstances, but continuing to see patients, continuing to keep their ER doors open and doing things on pen and paper. I mean, the resilience to sort of pivot and keep being an asset for the community is tremendous. So I just didn't want that to go unsaid because that has nothing to do with the cybersecurity piece.
Yeah, the people that are in these systems and the people at Change Healthcare and the people in all these systems, they're doing the best they can.
That's right.
And when a system gets hacked, I mean, what you start, the IT department starts seeing data being funneled out, and they just shut everything down. Literally shut every system down.
Yeah.
And the next story we should go to, NPR had a good story where they interviewed several Ascension employees, and there's one from a NICU. Yeah, this Chris Fuentes in Austin. She's saying it's kind of like going back 20 years, but not even with the tools we had then. Like 20 years ago, we were used to working on paper.
Right.
And now they literally have like printouts of the EHR in a folder, and they're like making handwritten notes. Everything is slower and harder.
Medication, labs, imaging, nurse visits,
so
doctor's rounds.
The people in the systems are working harder, and they're doing the best they can.
And they're keeping it running.
Yes. And I think it's also true that the patient care is not as good. It's just not as good.
I mean,
I don't mean just insult the work they're doing, but
I think you're just talking about what the impact of this kind of degradation is
on our healthcare national infrastructure or the ability to treat the 330 million people we have.
Yeah. And then just shifting away from that story for a second and moving to financial performance, Ascension is sort of in the list of health systems that's turning it around. Recurring operations, they've improved by $1 billion at the 9-month mark of this fiscal year. Some really impressive statements here. I'll just read from this article here in Fierce Healthcare. Leaving out impairment and non-recurring losses whittled the system's most recent recurring operations loss down to $25.4 million, as opposed to the prior year's $647.1 million recurring operations loss. Fiscal year-to-date income from recurring operations was $15 million, well above last year's nearly $1.1 billion loss. That is a hell of a 12-month turnaround.
Yeah.
My God. So huge kudos to Ascension. I mean, it feels like we don't know what the economic impact of this incident that they are going through is going to be, but they were clearly on the path year over year, by next year, turning this thing to a profit. I mean, notwithstanding any huge changes in policy or a pandemic or something like that, but they were clearly on the road to getting back to profitability. And so hopefully this is not too much of an impact to them financially. It obviously will have an impact, there's no question, but hopefully that impact is not too much.
Yeah, I think they've done a good job. They'll have to navigate through this new stuff. We don't have visibility to that. But all these health systems have a lot of overhead, right? So they really benefit from an uptick in more patient volumes and higher acuity patients that leads to better reimbursement on the same, there's a lot of fixed asset, a lot of buildings, a lot of staff that are coming in no matter what acuity patients they're treating. And so I think they've operated well, but also the environment's better for it.
Okay, so Providence, just really quickly, also turned it around.
Yeah.
$176 million operating gain. Last year, they lost $345 million. This year, $360 million bottom line for the first quarter. So, another great turnaround.
Yeah. So I think, as we talked about in the economy section, if we have inflation that stays a little bit higher than but stays reasonable and doesn't shoot up, I think the health systems will continue to do well.
Let's talk about doctors for a second.
Yeah.
So this was a great find. So there is a report that has come out from Doximity. It's the 2024 Physician Compensation Report. And the first half is, I don't know, kind of just wrote. It's just a bunch of different, numbers on
compensation by subspecialty and
blah, blah,
location.
blah. Yeah.
Well, we have the whole report in the show notes if you want to look at it.
Not that interesting. But the headline here from Fortune and their review of the report is about burnout, right?
Yeah.
Moral injury, and says that 86% of doctors fear for the future of American medicine, that they are often stretched quite thin. I think about my parents' primary care physician. She's amazing, but I feel like every time I'm in her office, she is like running pillar to post, really, really maximizing every single minute. And I know, if she's got high acuity patients like my dad, on top of that, you've got just sort of the humming urgent nature. And most people don't think about that for primary care. But that humming urgent nature of, caring for patients, wanting to be responsive.
Every issue is really important to that patient and their family.
Yeah. And so I can't relate because I'm not a physician, but I can relate insofar as I know physicians who I believe this is true, that they are just absolutely stretched too thin, and I feel bad because, as sort of the advocate for the patient and, the power of attorney for the patient, I'm there for the patient,
Right. Yeah. You're not there to make her life easier.
No, I'm really not. But I can recognize
we should figure out a way to make it easier for the docs.
Yeah, it's like if you have a doctor who does a great job, it's impossible to not care about that person, right? And so, I certainly want better for her. I want her to have more bandwidth and less stress. But there are some really interesting findings in this compensation
report. The first half is not that interesting.
Yeah, but then get to a section on gender pay gap. And
this was shocking to me. I don't know why I wasn't aware of this, but I wasn't.
No, but it's just one of those things where okay, you hear about it in Hollywood and you can kind of understand how it goes down there because that industry sort of has a history of sexism, quite frankly. Yeah. But you sort of feel like healthcare is supposed to be just a lot better about this kind of stuff.
And it's supposed to be like a meritocracy and based on how you did in medical school and how you are performing a surgery or treating the patient.
Yeah. And so they've got a slide here with a graph that shows a consistent gap not closing over the course of the last 6 years. It hasn't closed at all. Okay.
Right.
Both men and women physicians are making more, right? They're both making more on average. But the gap is the same, and the gap is over $100,000.
Yeah. And like 20%, over 20%. So men make 23% more than women for doing the exact same specialty, the same CPT code, same everything.
So anyway, and then, they sort of go down and they dig into the specialties and then they sort of bear it out because immediately you might say, well, maybe they're in different specialties. And then no, they go specialty to specialty and they sort of show you the difference in the gaps, and some of the specialties with the largest gaps. Orthopedic surgery has a very large gap around, $60K in difference. GI has a pretty large gap, colon and rectal surgery, gastroenterology, ophthalmology, and then the ones with the smallest gaps here, oncology, internal medicine, pediatric infectious disease, hematology, and medical genetics.
It's also the ones that don't pay much.
Yeah. And then, you know, if you ask the different genders, like, you know, do they believe there's a pay gap? Right. You know, women, 75% say yes, men, 47% say no, 24% say unsure. So it basically flipped.
Yeah.
You know,
right.
75% of the men are like, I don't know, or no. And 75% of the women are like, yes. So anyway, I just thought that was sort of very illuminating.
That was surprising. I knew that the burnout, so we're going to get to the burnout in a minute. I knew that was an issue. The gender gap, I just was naive about it.
Yeah, that was a new one. So if you scroll further down in this report, you know, they get into the importance of autonomy and work-life balance. And I thought this was a really telling stat here. So year over year, this trend is growing that more physicians, all physicians, whether they be women or men, but actually it's growing more for men than it is for women, would accept lower compensation for more autonomy or work-life balance.
Right.
So that's just telling you, like, the money cannot make up for the stress of the work.
It's growing, and it's 70%, 75%. So 3/4 of physicians out in our system would prefer to make less money if they had a better work-life balance, more autonomy in their role.
That is a staggering
That's
metric.
A staggering
when you say it that way.
Yeah.
Right. 75%.
So it's grown from 71 to 75 in the last year, but it's almost everybody.
Yeah, that's rough. So anyway, great report. It'll be in the show notes.
Yeah.
Continuing on, moving to more of a health equity story. We've talked a lot over the course of this podcast around real estate, corporate real estate, and we talked also about closing of drugstores. And so this story from the Wall Street Journal kind of puts those two together, and generally just focuses on. And then, you know, you take the weak consumer as well, and the story here is 3,000 fewer drugstores were open for business at the start of this year compared with the same period in 2019. That's a lot fewer drugstores. And you and I were talking about this in advance of recording, and this is a health equity story, right? Because if you live in a sort of really strong economic urban center,
and you have 4 computers in your household and 3 cars.
Right. You still have a lot of drugstores. Like in Nashville, we have no shortage of these drugstores. B, we have alternatives in grocery stores. You know, all the Krogers, all the Publix.
And it's easy for me to get online.
That's right. And then on top of that, you can go to Amazon if you want, right? And you've got all those options. But when you think about, you know, lower economic environments, whether they be urban or rural, right?
Yeah.
Drugstores, you know, it's like when they talk about food deserts, drugstore might be the only thing that's accessible.
Yeah.
And then you know, you would need a car to sort of get beyond that drugstore, and a lot of times you're not going to have a car.
Yeah.
And so,
and I think I don't have, it wasn't in this story, but my belief is that's where they're closing the stores.
That's where they're closing the stores.
Yeah.
Yeah. And so we are creating more health deserts across America. You know, we talk about hospital closings, but 3,000 fewer drugstores, that's a meaningful number, right? I mean, that's a number that you got to start to pay attention to. And the trend is we're going to lose more.
Yeah. The basic function of dispensing drugs to patients is not a profitable business. The way that the economics have been pushed, you don't make money. Every script fill costs more in labor hours than you get reimbursed for.
Yep.
So systematically, it's putting a ton of pressure on the independents, and I think it's going to continue.
All right, moving to pharma. GSK has a potential blockbuster asthma drug showing promise in the latest trial. So this is a big deal.
Yeah.
Lots of people suffer from asthma, and this is a long-acting biologic, ultra long-acting biologic, 6-month dosing schedule.
Yeah. Yeah, I mean, you only have to get a treatment twice a year, which just makes it so much easier for compliance, which means there'll be many fewer, you know, exacerbations and problems with asthma. It's going to be great, and it's going to be it's like a multi-billion-dollar drug. It's almost not quite to market. They went through a significant trial and got good results.
You know, one of the things I immediately thought about is many of the people that I know who have asthma, they're actually less active. exercise wise,
Yeah.
because it's just a damn hassle, man. It's
Yeah.
like they get active and then, they get an attack and they got to have their inhaler with them. And so they just kind of opt out of it. And they're just more sedentary because it's going to trigger an attack.
Mm-hmm.
Exercise is going to trigger an attack. This is so promising. Can you imagine if all of those people now have this 6-month acting shot that they can take.
Yeah,
and now, just go get fit.
Right.
You know what I mean? Like, how much progress can they make health-wise over the course of a 5-month period of not having to worry about having an attack when they go out to run a mile?
Yes. Yeah,
that's amazing. Great. Yeah, so this was really, really exciting, just because everybody knows somebody who has asthma.
Yeah.
You know what I mean? So that's really cool. Okay, on the digital health side, Hims & Hers is expanding weight loss program to include access to compounded GLP-1 medications. I think you said the stock price jumped up on this news.
Yeah, they announced this on Monday. The stock price jumped like 40% in a day.
That's ridiculous.
It came back down again. They are compounding GLP-1 medications themselves. So it's similar to Ozempic and Wegovy, same active ingredient, but they're making it themselves, which actually is probably good because there's a shortage. And Hims & Hers, they have a good distribution platform.
They have a great distribution.
I'm sure they'll sell a lot of it.
Yeah, to me, they are a harbinger for what is going to be a proliferation of D2C. So
yeah.
They kind of do all this stuff first. They were kind of them and Roe were kind of the first ones to really jump on the scene with Viagra sort of in the mainstream. And now, like, you can buy Viagra from anywhere, right? You know what I mean? And so I think the same thing is going to be true here, right? A lot of those D2C platforms with distribution and marketing capabilities are going to see this.
Yeah,
it's table stakes. They got to do it.
Yeah, we just looked for Jumpstart Foundry, our really early stage platform. We just looked at a bunch of companies to do this quarter's investments, and there were several in this competitive space, compounding GLP-1 with a digital platform. We picked the best one and brought it to the selection committee, and it's just hard.
It's hard.
I mean,
it's hard. Yeah.
Yeah, they're the best one, but there were 15,
right. and now you're gonna go against
Hims has a big distribution channel. So, but yeah, I think you're right. There's going to be 100.
Yeah,
and many of them will struggle, but it's going to be good for access.
Absolutely. All right, moving into stories about us as a population. So this is sort of related to that Boulder Health VC funding around addiction. There's a story in the New York Times talking about the opioid epidemic in Baltimore, which I was not aware of, but also is not that surprising. It seems to be par for the course with the kind of challenges that Baltimore as a city has. Baltimore is leading the country in opioid deaths, and I did not know that.
By a lot.
Yeah, I did not know that. I mean, you pulled this story up. What sort of struck you when you were reading it?
I think the Times does a good job really going pretty deep into a particular topic in a geography like this. And so it's a kind of a long story. They assess all the different parts. We know that fentanyl is really at the source of the overdose issue. We have an opioid addiction problem in the country, but the fentanyl aspect of it is what a lot of people die from. And so there's a lot of detail. They interview several people. The strength of fentanyl, no one understands because it is chemically mixed up in different batches or mixed different ways. I don't think there's any consistency. And so even if you get it from the same dealer or whatever, the same source, and there's no bad actors, the way they mix it, one amount might be just the right amount to have your fix and get high and be okay. And then the next day you do the same thing and you overdose. And so they went into that, which was interesting and pretty scary. And then I was really looking for the tie into the port, because we talked about it when you went and visited Philadelphia. I think that there's a lot of fentanyl coming in through our big ports. I think that's fairly well established, and Baltimore has a huge port right there.
Yep.
but they didn't go into that. But I think that's a source. And so anyway, those were the two big takeaways. And then the charts were really kind of sobering and sad. So let's talk through the charts. So in Baltimore, back to 1993, there were roughly 40 deaths per 1,000 people per year, which is well over the national average,
Yep.
but pretty stable. And then in 2013, when fentanyl arrived as a thing, it just goes, I mean, for people that are listening, it goes, I mean, not vertical, but it goes up very dramatically to a peak of about 190 per 1,000, which is way more than any other city in the country. And there's no reason why it would be worse than New York or Philly or DC that are all, geographically very close and I think kind of similar. Maybe not they're exactly the same, but so that was the first thing, that they've had this huge spike since 2013, which to me at least is very correlated with the introduction of fentanyl.
Yep, absolutely.
And then the next chart that was really scary for someone who lives in Tennessee is they showed like how dramatic Baltimore is compared to, I don't know, 5 or 6 other cities around the country that also have a bad problem. And so they've gone down a little bit since the peak. This year they're at 170, but that is, more than double most other cities. But then what caught my attention is there's 2 Tennessee metro areas that are number 2 and number 3. Nashville metro area is number 3 at 81 per 1,000, and Knoxville is 86. And I had no idea. I was completely ignorant about that.
Yeah.
So I live here and I'm in healthcare.
Yeah. So we've got, effectively a problem half the size of Baltimore's, but still,
Baltimore's the worst in the country, and we're half the size.
Right.
The national average is something like 20, and so we're 4 times the national average.
And probably importantly, Nashville seems to have, according to this chart, more opioid deaths per 100,000 people than Philadelphia,
right?
Which we covered extensively.
Yeah, because you went and visited it.
Yep.
Yeah.
And San Francisco.
Yeah, well, which
everyone likes to pick on San Francisco.
Yes.
What the hell?
Yeah, it's terrible, and I need to do research. I mean, I just came across this yesterday, but I need to do some research. But because I wasn't aware, but it seems really bad here.
Yeah, we should talk to our friends in public health here in Nashville. Yeah, for sure. Get some more insight on that. All right, shifting out of that really kind of terrible story. We have this story here about Cadence, which is a remote patient monitoring platform, pretty scaled platform.
Yeah, one of the bigger ones
in the space. But they have come out with an actual study that's demonstrating that remote patient monitoring reduces costs and comes out with better outcomes for heart failure patients.
Yeah, they did it in partnership with an academic researcher, got it published in the Journal of Cardiac Failure. And I just think it's important to point out stories like this when it's published in a respected journal and has good results. We just talked about how burnt out and difficult it is to be a doctor, how hard it is to be a doctor. I think we need to keep doubling down, keep adding to remote patient monitoring. It works. It sort of is done in adjunct with the doctor, in support of the doctor, and it seems to have good results.
Yeah, I mean, I told you, I have been shocked at how poor remote patient monitoring actually is in practice.
Yeah. And
it makes me really mad, at the sort of the resistance to innovation and people rolling their eyes at something like this, when then you're on the patient side and you really need a great RPM setup.
Yeah. And
you realize like all that eye rolling has led to no one actually working on getting this in place, and so, kudos to Cadence for actually, I bet this is what they're finding, right? They're like, we have to come up with some studies to actually prove that this is necessary. And it's just so ridiculous. It's like, obviously, if you just think about it, why is a hospital a good setting for care? Because there's a lot of reasons why it's not a good setting for care, right? But what makes it good is the consistent monitoring.
Yeah.
Your vitals are being checked all the time, right? Like that guides healthcare decision making, right?
Yes.
And so when you get home, the biggest thing that's missing, everything at home is better than the hospital, okay? Everything at home is better. The biggest thing you're missing is the monitoring.
Yes. And you don't need that much. I mean, 3 or 4 readings a week is gives you a lot of data as a clinician. And so I don't think it's that hard. But yes, the eye rolling, and I think we should double down on and do a lot more. I think we should reimburse more. I mean, it's having good outcomes.
Yeah. Yeah. We should I mean, Cadence, we can get to them. We should reach out to them and get
we have a lot of RPM connections. So we can talk to Cadence.
Yeah. I mean, I'd like to talk to them about like the rationale behind
why
the study.
they did the study.
Yeah, exactly. Yeah. You know, just and also just hear from their perspective, like how do they feel things are going in the remote patient monitoring world, you know? Anyway, appreciate them doing that. All right, this was a cool story out of the Wall Street Journal. This is a story that the headline is "Anger does a lot more damage to your body than you realize," and I just like it because we are finally starting to get studies that prove that, you know, the physiological impact of emotions on our body's functions, like things like, you know, blood flow.
Yeah.
Is material. And it's, you know, obviously you're not going to never get angry, but if you have chronic anger issues, guess what? You're probably going to have heart issues.
Yes.
Right. You know,
right.
and it's not like an old wives' tale. We're now starting to gather data to demonstrate that we are tracking blood flow against a variety of different emotions.
Yeah.
Anger versus sadness versus anxiety. And we can point to anger and we can say anger is the one that is most detrimental to your blood flow.
Right. Exactly. So, yeah, I agree. I think just educating myself, educating the community about this really does make a difference. And the idea of taking some deep breaths, counting to 10, doing some meditation, all of those things that we learned when we were growing up that were just kind of like wives' tales or things you should do. There's science. When you actually research it, there's real connected science there.
Yeah. And I think what that is going to do, and this is probably what the companies like Lore Health are angling for, it's going to start to legitimize, you know, mindfulness.
Yeah.
It's going to start to legitimize, you know, the importance of exercise, right? Not just on the positive effects, but, you know, the dopamine and how that lasts for the rest of the day and how that stops you from getting angry later on, right? So it's not just about the cardiovascular benefits or the muscle building benefits or the, you know, bone density benefits, but also like the endorphins and the you know, the biochemistry that's going on there. So yeah, I mean, I thought this was cool, and I think we need more studies like this that just sort of demonstrate to people that the array of feelings and how often you feel certain feelings has real implications to your healthcare.
Yes.
Right. We all talk about it, but it's completely different to get actual studies that are measuring blood flow.
That's right.
So I thought that was really cool. All right, moving into our AI segment, and then we'll wrap up this show. Yeah. All right, so Microsoft is full steam ahead on the AI side of things, and they are embedding AI into their laptops.
Yeah, that's right. They're creating a new type of PC that is kind of architected from the ground up to take advantage of all the AI stuff. And it's going to be incredibly powerful. It kind of puts AI into all of the, I mean, it's in the operating system, and they have a chip with Nvidia, and then they also have a Snapdragon chip. It's going to be really powerful, and they're beginning to create this like walled garden where if you really want to use all the Microsoft tool set, there's a suite of really powerful AI tools that will help you, and it seems really incredible. It also is locking you into the Microsoft world.
Yep.
And I don't happen to be a Microsoft guy, so I don't want to necessarily go into that world, but there's a lot of people that are in that world. And so it's interesting that in the last 10 days, you've had OpenAI, Google, Alphabet, and Microsoft all come out with their like Omni voice, text, photo, like image with a camera. always kind of on watching everything you do, because that's going to be really helpful. And it is going to be really helpful. And it's also going to be really helpful in helping them monetize their users. But that's, we've seen it before in social media, and it's happening again.
I don't mean to be hyperbolic, but this all is just way too Matrix plug in the back of my neckish. You know what I mean?
Yes. Yes.
Like I just don't want that kind of surveillance. I view it as surveillance. I don't see enough upside in whatever this thing is going to do for me to counterbalance the downside of this thing capturing everything I'm doing. Right? It's like enough is enough for me. For me, enough is enough. Like I want to use the AI in the settings I want to use the AI, and I want to know when I've turned it on, and I want to know when I've turned it off. You know, generally speaking, I want to continue to live in the real physical world with real people.
Right.
So,
right.
Look, everything I just said there does not mean that these laptops are not going to be great. I mean, I think Microsoft is really starting to put a real dent in Apple's overall positioning. I mean,
Apple is so behind. They're going to announce something at their thing, which is like 3 or 4 weeks away.
Yeah, but they just got to partner. They can't do it on their own at this point.
It's going to be interesting to see if they partner with OpenAI directly,
right?
Which I think will happen. Where they should have Siri be the brand name that everyone knows, but it's actually ChatGPT that's communicating with you.
Right.
That's what I think will happen. They might announce a Microsoft/OpenAI partnership. It doesn't matter. They're going to do something, but it's going to be a partnership. But I think what's interesting is I agree with you completely about the surveillance versus empowerment aspect. And I also worry that if you don't pick a walled garden to live in, these tools are going to be really effective.
Powerful.
And so you're giving up that for the autonomy. And so I don't know what the alternative is. We need to find an alternative.
Well,
independent.
I think it just depends on the timeline. You know, we're tracking this every single week. My sense is that we are reaching a point of narrative saturation where these announcements are happening so fast and so furiously that like they don't mean anything anymore.
Yes.
Even though they're massively impactful, we don't have time to respond or digest them or discuss them with other people. Like the only time I talk about this stuff is with you.
I know.
I mean, I have a couple of chats where people are like sending a couple of links in every once in a while, but like this is not day-to-day real life stuff I'm talking about with people.
Right.
So, you know, these guys are just innovating kind of all by themselves out there every single week, rolling out new stuff. And it's amazing, but it's still not clear to me how fast the uptake is going to be on these things.
Yeah.
Because it is a different workflow. You do have to work differently. And there's also just the fear factor, you know, and it is happening very, very quickly. So.
Yeah, I think that's right. And when people upgrade their machine, but you get a new laptop, whether it's Microsoft or Apple, the next one you buy is going to be like all optimized for AI tools, and you'll have it just embedded in. You're using Microsoft Word or Excel, and it's doing things for you.
Banner Health is investing in AI to maximize operating rooms. This is a technology space I've generally been very fearful of doing anything in because the OR seems to be just a cult of personality.
Yeah.
Surgeons are, you know, don't want anyone telling them what to do, how to do it. But when the health system is doing it, they're doing it at scale. That's a different, you know, thing entirely.
Yeah. Well, one, I was excited that Banner is getting in the game. Yeah. Because they have a great platform. We know a lot of people over there, and it's good to see them in. And then two, what they're saying is that they, there's a lot of cost in ORs. And if they can utilize that asset more efficiently, get them more used, that's better.
Yep. All right. So here's a story in Forbes. Headline: AI more likely to wrongly indicate breast cancer in Black women. Data in, data out. This is exactly why it's so important to have organizations like the Coalition for Healthcare and AI. Mm-hmm. We're going to have requisite diversity in the training data. Yeah. This is really, really, really important. And look, I've encountered it a lot of times. When just basic things like general labs, where you get these ranges on different biomarkers in your blood
Yeah,
labs.
and they
or whatever.
publish it for like all Americans.
Yeah, and it's like, they look at my stuff and they're like, hey, you're out of range. But the reality is, like,
Right.
all African Americans are out of range for this particular thing. You know what I mean? Like,
Yeah.
it's just kind of the way it is. And so, yeah, like, yes, AI the way it is today is just simply a mirror and reflecting all the current bias and or holes that we have in our ability to effectively diagnose, all sorts of people. And right now we definitely have issues there.
Yeah.
And so the AI is going to be no different.
Yeah, that's right. And it makes the next story interesting. So Epic came out with their first ever open source piece of software, which I honestly never thought they would have anything that came out open source. And so it's an AI validation tool, which is kind of a interesting thing to put out on open source.
Yeah. What's a validation tool?
Right. The validation tool would make sure that if you are checking your mammograms using AI, that you have done appropriate training with a diverse data set, for instance. And so it's great that they're offering this. It's called Seismometer. It's on GitHub. We'll provide a link to it. And it's wonderful. It's also going to be very effective at pointing out AI tools that Epic's open source system has decided are not done in the most effective, validated way.
Yeah. Now, the good news is it's open source.
Yeah, so you can modify it.
And also you can read the code.
Yeah,
so you can understand
you can
how the validator works. So that is good, and I don't want to knock them.
Anything
for that
they
at
put
all.
in open source can't be bad.
That's exactly right. But just reading from the README here on GitHub, Seismometer is a suite of tools that allows you to evaluate AI model performance using these standard evaluation criteria to help you make decisions based on your own local data and workflows. You can use it to validate a model's initial performance and continue to monitor its performance over time. Although it can be used for models in any field, it was designed with a focus on validation for healthcare AI models, where local validation requires cross-referencing data about patients, such as demographics, clinical interventions, and patient outcomes, and model performance. So that's pretty cool. It's really a tool, and then you get to customize it with your own, foundational benchmark data, and basically say, here's what we would have come up with as an outcome. What did the AI model come up with as an outcome? And you get to, it's open source, so you can install it locally in a secure environment, feed it your own sensitive EMR-based data, and then see what the output is versus what, your clinicians would have come up with when they were reading, results. So that's pretty cool. That's pretty cool.
Yeah, and I think it's interesting that Epic clearly understands, and we talked about it in the VC segment, the number of AI tools that are being released now, and they're trying to help the community and also help themselves keep some control on it.
Yeah. So, certainly position themselves as, the technology partner who cares about getting things right in healthcare.
Yes.
Right. To me, that's what this whole initiative sounds like.
Yeah.
And that's consistent with the Epic brand.
Yeah.
That's consistent with the Epic brand.
And probably good.
Yeah. All right. Final story. We've made it to the end.
Yes.
Microsoft's research blog, GigaPath, a whole slide foundation model for digital pathology. What's this, Vic?
Yeah. So they have created a new large model to be able to process slides, like pathology lab slides. So typically you're checking to see if a tumor is cancerous. You put it on a slide, and usually there's an image taken of that slide so that whether it's human or AI, you can more easily read it, process it, save it in their record. It's all done with images, even though it starts off with physical slides. And the way that traditional large language models work, it's very cost prohibitive, just given the data resolution there's so much data in the image that it's prohibitive to use a traditional model. And so they created a new entire process in order to be able, they call it dilated attention, which is sort of building on the transformer attention is all you need model. But they basically, I think of it as they sample little segments of the slide.
Yep.
And so they limit the processing compute requirements. And then based on those initial readings, they almost focus in or dive in on the important area, but using a methodology that, obviously you don't miss anything. So that's my, not that technical, but it was published in Nature, and it seems like a really important thing for medicine as we go, into actually using these things. Labs and pathology reports are a huge piece. And so I think it's good that they're working on this and innovating in it.
Seems like a bit of like logical human process mimicry, right? I mean, kind of what would you do if you were on the slide? You'd do like a high level scan.
Yes.
You'd look for problem areas, and then you'd focus in and increase the resolution on a particular area of the slide. You wouldn't like increase the resolution on the whole slide.
Yes.
Right. So
that's what the human does.
That's what the human does. Yeah. So it seems like they've changed the nature of the memory stacking inside of this transformer to make it much more efficient, where it's effectively doing like a scan and then finding the anomaly and then digging into the area where the anomaly is versus, trying to do that for the entire image.
Yes, I think that's right.
Cool. All right. We made it.
Yes.
Lots of stories this week. But I'm glad we kind of covered them all. I feel like,
yeah, thanks. If you're still with us, thanks for hanging in. A lot going on. And I don't know. I just think it's important to keep up with it because it happens so fast, you miss it, and then you don't know one of these stories is going on.
Yeah, not every week is a big news week, but this was a pretty big news week. So anyway, all right, thanks a lot, and we'll be back next week with more coverage of the news.
Yeah.